Welcome back to the channel. My name is Brahim, and we're going to go over some trading fees that we're going to go through on Trading 212. So, upcoming changes, blocked funds. As of the 3rd of April 2021, whenever a pending order is placed, so an order to happen in the future, the funds required for its execution will be blocked from the free funds in the trading account. Now, I don't understand why this wasn't already a feature. Basically, it's saying if you was going to put an order for shares, I don't know, let's say 100 shares of Starbucks, let's just say Starbucks is $10 a share for argument's sake. So that's basically $1,000 you're putting forward in an order. Now that $1,000 should be basically blocked until it's executed. Now, let's say you put $1,000 for Starbucks, $1,000 for Tesla, $1,000 for Amazon, that's $3,000 of orders. But you only have $2,000 in your account. Now, does that make sense that you can have $3,000 of orders out there, but only have $2,000, and then it will just be whatever one gets executed first, the first two stocks to get executed, that would be the two, and the third one won't get executed because you don't have the capital, and it makes no sense. You should have just blocked off the funds so you can even go for the third position. Of course, the positions are executed, so you can always cancel a pending transaction. But it doesn't make sense. It should have just been blocked from the get-go until you cancelled it. But it wasn't. The blocked funds will not be available for any other orders until the pending one is executed or cancelled. Basically what I just explained. This is to prevent you from purchasing shares that are worth more than funds available in your account, which may be one of the effects in case of extreme market conditions. Now, I think it's kind of obvious why they put these type of things into place. Extreme market conditions. So many people have been recently investing in OTCs, SPACs, GameStops, and memes. Meme stocks, should I be honest. So with all of this type of extreme market conditions where you see stocks go up 1,000% in a week or something along the lines of this, I think they're just trying to prepare themselves for this. Well, they can execute the price at whatever price they deem fair or whatever we deem what we want to receive. So I think they're more just trying to cover their own ass, being honest. And then something I already covered before, but I'm going to cover it again, Forex conversion. So Trading 212 used to be free for everything, but slowly fees are coming. Slowly. The Forex conversion fee will also be introduced as of the 3rd of April. And will be applied to only new positions, including such made with auto invest pies. Now, that's so much to take in. Let me break it down. Forex, when you trade a currency from one currency to another currency, let's say GBP to USD, British pounds sterling to USD American dollars. Now, so they're going to charge you 0.15%. And it says it here. To achieve this, starting early April, we'll introduce in a Forex conversion fee of 0.15%. So that's 0.15% when you buy into a stock in a different currency, and then when you sell it, that's 0.15%. So that's 0.3% overall that you're going to lose from your profit. Now, it's also including pies because, of course, pies you can invest in other currencies, so that makes sense. But this is the thing, it's only applied to new positions. So if you had a position pre-existing that date, not 100% sure, but when you sell it, you might not get charged on the Forex. That's my understanding of it, at least. Maybe you will get charged on selling it, don't know. But we'll find out. For existing positions, the amendment will come into force on the 3rd of May. That's the answer to it. So if you have a position and you want to sell it, you have till the 3rd of May, so you don't have to incur that 0.15% Forex fee. Now, 0.15% is a small number. If you can hold it longer and make another 10%, just hold it longer and make that 10% and pay the silly little 0.15% fee. Whereas if you're holding on to something and you're really skeptical, and you're like, I'm not too sure about the stock, and you're really scared of the 0.51% fee, I think it's a bit silly, but sell. But I wouldn't recommend that. It's 0.15%. It's not like it's 20%. Allowing a 60-day notice period during which the selling of existing shares will not incur any fees. As of the 3rd of May, a Forex fee will be applied for sell orders of existing positions. And today is the 9th of April, so basically you guys still have 1 month where you can sell existing positions without being charged forex. After the 3rd of May, you're going to get charged on selling any position that you've pre-existed, like you've had before. But to buy a position, you're going to get charged from the 3rd of April. So right now, as this video is being made, as it's going to come out, whatever, you get charged for buying in foreign currencies. To sell, you still have till the 3rd of May. But that's only for positions you've had from before April. So if you've been involved in GameStop, if you've been involved in buying S&P 500 through Vanguard ETFs, anything like that, if you've had that before the 3rd of April, you're absolutely fine to sell it by the 3rd of May and not pay the selling forex fee. Now, this really isn't going to affect long-term investors. This isn't going to affect people trying to 2 times or 3 times their stock price. This is more going to affect people that want to day trade for like quick scalps. That's who it's affecting. Would I personally complain about this? Not really. I mean, it's not positive for me, but if Trading 212 makes more money and they reinvest it into a greater platform, maybe invest some of it into customer service, because I'm gonna be funny. There was a point where they dropped off customer service and then just made it down to messages where they get back to you via email. Whereas you can't even call them now. You have to basically do it through like an intercom system on the app, which is still better than an email, but there's still no call centers or nothing like that. So I don't know if the 0.15% helps them to make more money and eventually makes customer support stronger. I'm all for it. I'm all for it.